I told you guys how much tech drives me crazy. Oh my gosh. So I hope I didn't lose any of you, but this app that I'm using, it normally, when I do the countdown, it mutes me. But I was just doing a talk this morning in my academy group, and I realized that they could hear me. So it didn't mute me. So I muted myself this time. And guess what? I was on mute for the last couple minutes. So I apologize for that. If I have a chance to go back and edit it, I will do that for you. This is just, seriously, tech is like my nemesis. So what I was saying is that I am going through, now I have to find my worksheet for you, but I want to answer some questions for you today about things that have come up as new members are coming in. So the last, 20 new members that came in, I want to tell you what their questions were so that we can talk about that. Some of the services that I offer do answer those questions, do help you get past the questions that are keeping you blocked and maybe not setting up your profit plan, maybe not doing your accounting the way that you should be doing it. And so I'm going to talk to you about that, but then I'm also going to talk to you about a couple of profit first strategies just to kind of hopefully push you over the hump of where you were stuck so that you're not stuck any longer. So I'm sorry again about the live. I'm going to have to go through and just see when it started and just edit that for you. So, oh my gosh. Anyone else have tech issues? It's seriously my nemesis. So here's what I'm hearing. So starting but afraid my margins aren't accurate, how to reduce costs, figuring out the right percentages. Tom said, know what the percentage is to adjust my categories to, having the numbers right, things like that. So part of knowing what percentages to adjust your categories to is knowing what the categories are and how they relate to your accounting system. So that is one of the things that I do inside of the year-long course that I have, is help you go from not maybe understanding your accounting, not knowing better ways you can be doing things inside your accounting system, to at the end of the year being the expert in your accounting system, in the software that you're using, most typically QuickBooks, but if you're using something else, definitely can adapt some of the lessons to that. But I used to do this course in 3 months. I used to just do like the profit portion, get you your profit plan, have a blueprint so that you know exactly what your numbers are going to be based on your history. And I just found 3 months just isn't long enough, because life happens, things happen, especially with COVID. Some people get COVID and they can't focus on this kind of things, or their kids are sick, or just whatever life throws at us. A year just ends up being a better time frame, because if you do end up dropping off, you can drop back on. But what we do is a lot of accountability programs. So every week you get an accountability email that's going to be asking you where you're at, how you're feeling. Maybe it's amazing. I had someone this week that they are doing amazing. So that was awesome to hear. They had a one-on-one call. We were able to jumpstart them from where they felt stuck, and then now they're doing great. I have other people that will post in there if they're stuck, and then I can know like what kind of problems they're stuck on, so that we can follow up and get those answered. And about every 2 weeks, you have a phone call. It's more like a web meeting. It's not Zoom, it's a different program, but like a web meeting where we can talk one-on-one and you can show me where you're stuck, right? Because you can share screens inside of there. And it just makes this a much easier process for you. So that's like on the knowing what your percentage is to adjust to, getting your numbers right. Again, the first place we start is, well, you have this profit and loss statement. How does that equal these 5 accounts that we talk about in Profit First? So that's the first thing we do. The next thing that we do is evaluate your books, evaluate how you spend your money, because this has to be personal to you. It has to work for you by taking your history, your spending plan. You already have a spending plan, even if you don't realize it, even if you're not, officially using one, you have a spending plan that you've been using. So what we want to do is uncover that plan, and then we go from there. Then we use those numbers that you're already, let's say, comfortable with. It's already what you are using, and then we can adjust that to answer like the question I got from Lisa. Paying myself, how do I do that? So we can start paying you once we know how you spend your money. And once we've uncovered how those accounts in your profit and loss statement match up to the profit first account. Those things link together. And again, we do that over time because it's really important that we get this right. In a year, we want you to go from not understanding it, not having a plan, to being the one who understands it and you have a plan, you know where you're going. The benefit of that is if you are a smaller business where you're going to be the one doing it or somebody on your staff is doing this in-house, you know how to help them. You already know you're doing it right. But if you're in the position where you want to outsource that, now you know what questions to ask. And when the CPA or bookkeeper asks you questions, you understand what they're saying. So that is really the goal of the program. That's how I help people. There's weekly coaching, weekly training. It's really in depth so that you know your books inside and out, and you know that you're doing things right. Because it's so important. We can do our books all day and all night, but if we're doing it wrong, it doesn't really matter. In fact, I'm going to share this with you. I was working with a client this Wednesday, and we discovered that her bank sends over extra information. So what I mean by that is when we're in the online banking, her bank doesn't just send the transactions that actually posted to her bank account. It does pre-authorizations and then sends those into the accounting software. What a nightmare, right? Well, now she knows what to look for. So we did have to go through, it took us quite a while. We did have to go through and we had to we reconcile the account and we saw, hundreds of what looked like could be duplicates, weird. And then that's when we figured out, okay, these are pre-authorized transactions that the bank should not be sending them. She called the bank, but the bank's, blamed QuickBooks or something, but QuickBooks has nothing to do with that. The information her bank is pushing to QuickBooks is the wrong information because of the way they do their pre-authorizations inside their software. But the good part was once we know that, now she knows when she's in the online banking, she can go in and exclude anything that says pre-auth. So we did figure out that it does say pre-auth on there. So we were able to do that for her. So that's just one of the things where it's really, really helpful to have help and to have someone to ask, right? So you can get stuck really easily if you don't have someone that you're able to ask. Let me see any other. Okay. So that was paying myself. Some people said it confuses them. Melissa said she was confused. So we can do a little bit more, like next week, I'll probably do a little bit more basic, profit first idea training. So that might help you a little bit. But those of you who are really stuck on distributions and what you should be doing, that's what I wanted to mention with the book today. So my quick tip for you is to do your instant assessment. This is in chapter 4. So chapter 4 and chapter 5 are the two primary chapters that you're going to want to pay attention to if you're setting up your plan. Now, chapter 4 does the instant assessment. The instant assessment only tells you whether you need to increase or decrease in the profit, owner's comp, tax, and operating expenses. Here, I'm going to open this real quick. Okay, so here is what it looks like once it's filled out. There's a blank copy of this in the back of the book. And then there's probably, let's see, actually, if you go to the membership site, I can post the membership site. There are free resources on the membership site, and one of them is this instant assessment form, but it's in the book. So if you have the book, you're going to fill this out. Do it in pencil in case you make any mistakes. But again, what it's going to tell you is simply, do you need to increase? Oh, it's not too blurry. Do you need to increase or decrease profit? Increase or decrease owner's comp? Same for tax, same for operating expenses. But the problem is what a lot of you are doing is then you take this percentage that we use to tell whether you can go up or down. It's called the TAP, and you're using that as your numbers. Don't do that. That's what's throwing you off. That's what's making your life miserable. In fact, let me see if I can go to that page that has that. Okay, for instance, the ideal business that is making between $0 to $250,000. What does that look like? What do their operating expenses look like? 30%. That's running pretty lean, which you can certainly get there. But I know from talking to you that a lot of you are 89% going out to your expenses right now. Now you tell me, can you go to 30% from there? No way. No way are you going to just be able to pick up these numbers from this chart, start putting it into your system as far as those are the counts, percentages of where you're going to spend your money and have this work for you. It's not going to work. So what do you do instead? So instead, what I want you to do, once you have figured out what your actual numbers are here, I want you to divide each of these by your real revenue number to come up with your percentage. You need to do that. That's the important part. You've already written out what you've spent, right? Now take it that one step forward and do your percentages. Now, if that confuses you, that's where chapter 5 comes in. So chapter 5, it's not as pretty because it's not in a chart format, but chapter 5 tells you how to use your numbers to create your own percentages. But I can tell you, it's really can be that simple. So use these numbers. Here are these numbers that you came up with. Don't use the ones from the book. This is a sample. Fill out your own form. Use those numbers. Divide your profit by your real revenue. Divide owner's comp by real revenue, and so on to come up with your percentages. And that is where you are going to start. If this is still confusing to you and you're like, I'd rather not, thanks. What I want you to do is just take 3%, put 1% to profit, 1% to owner's pay, and 1% to taxes, leave the rest in operating expenses. Try that out for a couple weeks. See if you can start moving some percentages from operating expense over to the profit, owner's pay, and your tax account. All right, that's all for me today. Again, sorry about the tech issues. I'll see if I can go in and edit this video for you. Otherwise, have a wonderful weekend, and I will see you here next week.